Palantir stock is now down 15% off the highs in the last month. If you remember, about a month and a half ago, I did a video answering if you should buy Palantir stock, and I said no, that the stock was too expensive at that point in time. But what about with this 15% discount? Is Palantir stock a buy now on this big dip? That's the question I'm going to answer in this video. By looking at the company's recent performance, looking at the revenue growth over recent years, looking at how its cash flow has expanded, the impressive return on its invested capital, and I'll look ahead at the prospects, at the excellent prospects Palantir has over the next 5 years. Bring it all together with the valuation measuring the new forward price to earnings ratio and the new discounted cash flow valuation I've calculated for Palantir to answer the question if I think it's a buy on this dip. Let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So like I mentioned, the stock is down 15% off its high. That's a significant loss for many investors that had been coming into Palantir stock because of all the momentum, all of the hype. Share prices were reaching record highs, and now it's hit a bit of a wall here in the last month. Now, like I highlighted, I did a video about a month ago. I last updated this stock on December 11th, 2024. And I told investors that I thought the stock was a hold, that I thought it was going to perform in line with the market. And what I mean by that is if the market increased, I felt Palantir stock would increase along with the market. But if the market fell, I felt Palantir stock would fall in line with the market. I didn't feel at those valuations on December 11th that Palantir stock would outperform the market. That was my conclusion in the video I did on December 11th. So I'm going to update that recommendation here and let you know if I still feel the same or if this 15% discount changes my opinion on the prospects of Palantir stock as an investment. So Palantir has done an excellent job in increasing revenue, especially in the most recent 4 to 6 quarters. It's really accelerated growth. And the thing that's fueling Palantir's growth is the increase in the commercial segment, the business segment. Palantir had always done great with government institutions with deep pockets, but it had more difficulty with enterprises because its services are so good, they're unaffordable for most businesses. And so now with this new program Palantir has implemented, it's gaining access to a broader set of businesses because Palantir is showing them what they're capable of achieving. And that's convincing more businesses to expand their budgets to incorporate Palantir as one of the services that they're buying. Now, in the last month and a half or 3 months, that Palantir stock had soared to those exceptional highs. That was mostly on the back of enthusiasm for the market, enthusiasm for AI stocks, enthusiasm following the election results in November. Palantir hadn't demonstrated some big thing that justified that huge price increase. That's why you notice the price increased, but the valuation also increased. Oftentimes, when a company improves operations, like they have a big cash flow burst or a big increase in earnings, the market price will increase, but the valuation will not increase. And if you're kind of scratching your head and asking what's the difference between market price and valuation, well, I'm glad you asked. See, the valuation is measured on some type of metric, something that you're getting in return for the price that you're paying. So in the case of Palantir Technologies, I was measuring based on the forward price to earnings ratio. And this is what I was alluding to when I told investors that Palantir was too expensive. When I looked back 3 years at the forward PE ratio, it was trading at the highest it had ever traded for, close to 200. The average stock in the S&P 500 trades at a forward PE of 20 to 25. Now, Palantir is not the average stock. It's a premium business with excellent prospects, right? I showed you the revenue growth. Look at the improvements in operating profit margin. Company has become profitable on the bottom line. Look at the improvements in cash flow from operations to sales at 37.6%. growing from negative 25% from 2021. Look at the improvements in return on invested capital. All of these are critical metrics that Palantir has demonstrated phenomenal improvements on. It is a premium business that has earned the premium price, right? Just like when you go to buy a car, you have your Honda Accords and Toyota Camrys. Those are basic cars, basic models, right? That earn a basic price. But then when you go and you look at the Ferraris, the Aston Martins, the Mercedes, the BMWs, those are premium cars that deserve premium prices. You're willing to pay a higher price. It's the same in the case of Palantir versus the average stock. Palantir is not an average stock, it's a premium stock. It's like the Aston Martins and Ferraris and Mercedes of the stock market. It's one of the best in class. And so it deserves a premium price. But my argument a month ago was that that premium was too much. At close to 150 forward PE, I felt that was too much, too high of a premium to pay for Palantir stock. Now, I did have Palantir stock rated as a buy early in 2024. For about the first half of 2024, I had it rated as a buy when it was trading at a forward PE of around 50. At around that price, between 50 and maybe even as high as 60, I felt that Palantir stock, because it's such a premium business, you're paying about double or 3 times the average price of the stock. I felt that was worth it. That was a premium price to pay. But that's just one way to look at valuation, right? Another way I look at valuation is by doing a discounted cash flow model. And I had done a discounted cash flow model on Palantir stock before in December, around November, October, and I utilized that DCF valuation model for my stock price evaluation of Palantir to determine if it was an excellent stock to buy. And I updated this today. I did a new valuation model on January 7th. And even my new model, where I made some adjustments and I lowered the company's risk profile, I made an adjustment to lower the risk because the stock price movement, as measured by the beta, I felt wasn't a reflection of the business. The company generates very strong cash flow. It's got $4.5 billion in cash and zero debt. It's not a very risky business in terms of the balance sheet, in terms of how much cash flow it generates, in terms of profitability. But the current beta is at 2.7. And so I adjusted that lower to 1.5 to incorporate that it's not such a risky business. And even with that decrease in adjustment, I still have an intrinsic value per share of around $20 for Palantir when the market price, even after this dip, is at 70. So whether I look at the forward PE or I look at the DCF, it still suggests that Palantir is trading at a super premium price. And yes, I agree, it deserves a premium price. It's an excellent business. And look at the free cash flow expectations from Wall Street. They expect its free cash flow to grow from around 100 million in 2024 all the way up to 2.83 billion by 2028. So roughly tripling of its free cash flow expected over these next few years. And I incorporated that into my valuation model. Even after incorporating that huge increase in cash flow, it still gives me an intrinsic value per share significantly below the current market price. So to update my recommendation, do I think Palantir stock is now a buy on this dip, or do I still think it's a hold? Do I still think that there's room for it to go lower before investors should buy? I do still think it's a hold. So I don't think this dip is enough of a dip to justify upgrading my price for Palantir stock, or in other words, upgrading my rating for Palantir stock. Even though I think it's an excellent business, I think it's performed phenomenally well, and I would be willing to pay a premium price for Palantir stock. I just feel like the existing premium is way above the premium that I would already be willing to pay. So even after accounting for a premium boost because of the premium business, it still suggests that there needs to be further room lower before I can upgrade this to a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.